Good evening and welcome back to Be Rich. Today, actually, I'm out of town, so I am not actually commenting on what happened in the market, but rather I want to comment on a larger trend that is taking place across bond funds. As you are aware, the interest rates across the globe are increasing, and therefore, bond funds are taking a big hit. But there is a stranger development in the bond markets which I want to talk about globally. Globally, fund managers invest in all sovereign bonds with weighted average risks. Normally, if the company is stable and sound, then these bonds should be easily subscribed. Now, two conditions are affecting the bond market. One is the fact that the dollar is continuously going up and interest rates are going up, means that vulnerable nations are not getting money, and already several countries are in default. Like Turkey defaulted much before because of its politics. Pakistan is in serious trouble and is permanently in a state of default. Now there is Sri Lanka, which has defaulted because of global pandemic conditions, running out of dollar, and also the fact that the self-inflicted injury of going organic too early. Sri Lanka is today a basket case with no money, and several months have gone. There is supply shortage of fuel and everything else, and the economic system in Sri Lanka has completely broken down. The IMF says there are more than 100 countries in the world which face these kind of problems. This is one type of risk where bond managers do not want to put their money into countries which they consider vulnerable. Also, there are countries like India where they have invested in the local currency, and the return between India and America is normally very high, and India is a rather stable country where interest can be received in rupees, bought as dollars, and sent back home. But unfortunately, rising yields in America have made Indian bonds unattractive, forcing people to sell the Indian rupee bonds and transfer the money outside the country. And therefore, this has led to rising bond yields. And this is putting pressure on the Indian economy. As such, this is because India does not borrow in dollars because the exchange risk is that with the person who has invested money. So, bond managers will flee countries which give higher return yields, but where the bond manager has to take the risk of currency will also see exits. Therefore, the bond fund manager has limited options. Now, according to the Financial Times, a new species is starting. Bond fund managers, after the Russian invasion of Ukraine, have stopped investing in Baltic states and Finland. This means there is a group of states which are there in the Baltic Sea, which are today liberal democracies, but originally were part of the Soviet Union. This is countries like Lithuania, Estonia. Also, a country that borders Russia, such as Finland, is also in the radar. Finland and Baltic states are finding it very difficult to attract bond funds because the managers don't want to be caught on the wrong foot. In spite of several warnings from Russia, they were still holding Ukrainian bonds. Ukraine was running a stable country, its bonds were manageable, interest was being paid on time, their maritime exports was more than enough to cover the interest and bond repayments. But the Russian invasion put paid to everything, and their Ukraine is now defaulting, promised to pay after the war has ended peacefully. But we do not know when the war is going to end. Unfortunately, now bond fund managers don't want to be caught with their pants down. Therefore, they feel that Russia might invade Finland and want to expand its empire back to the old Soviet hegemony and want to capture Latvia, Estonia, which they do not want it to happen, and they don't want to succumb to that pressure. Therefore, they are not in a position to invest money in that bond funds. This has meant that there is a premium being demanded by investors who are buying bonds issued by Latvia, Estonia, and Finland. Even though these bonds are safe, these countries have no history of default and they have returned all the investors' money on time, even if the bond is marked in foreign currency. However, after what has happened with Ukraine, most of these countries are at a heightened risk of being invaded by the Soviet Union. So much so that Sweden and Finland have already signed their application and have told they would like to join NATO and get NATO's protection against a possible invasion by the Soviet Union. Turkey is today blocking the path for this. Turkey's Erdogan is sympathetic to Russia, and Turkey historically has been an American ally and has signed the NATO agreement. Erdogan now is blocking the entry of Finland and Sweden into the NATO. If these countries join NATO, then there is a reasonable degree of protection. There is also worry in international markets about China flexing its muscles, and hence they are now going to create problems for the Taiwanese bond markets. Joe Biden has come out in open and has said that he will defend the Taiwanese at all costs, even if it means that US has to militarily intervene to defend Taiwan. US will do so. This means there is heightened global tensions and global fund managers want to avoid any country in which there is risk of conflict or any risk of default. The entire trade has become a risk-free trade and therefore is very risky. It is the bond fund manager wants only to invest in safe bonds such as English, German Bundesbank, the French bonds, and the American bonds. This is creating undue pressure on our countries which need to raise money but who are perceived with the risk of invasion from Russia. Strange are the times indeed that the world's interest rates would shoot up so suddenly. Thank you for watching. Be rich. If you like this video, kindly consider subscribing to my channel and turning on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. If you like the content, kindly consider sharing among your friends and relatives. I once again thank you for watching. Be rich. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.